With a market cap of over $700 billion, Tesla is the 10th largest constituent in the S&P 500. $700 billion is over 58 lakh crore in rupee terms. Compare this with Reliance's market cap of about 21 lakh crore. So in terms of market cap, Tesla is almost 3 times the size of Reliance Industries. Now Tesla has been a wealth creator too for its investors who invested in the stock 5 years ago. Its 5-year return stands at about 70% per annum. Now its snazzy EVs aren't just highly coveted by car lovers, but they have also made Tesla the poster boy of electric vehicle revolution. EVs have made inroads in India too. But if you want to play the EV investment theme, until now, you had to bet on a listed automaker or an auto ancillary company as there weren't a direct EV play like Tesla. This is going to change now as Ola Electric Mobility lists on Indian stock exchanges. Ola Electric will be the first Indian EV manufacturer to list on Indian exchanges, and this makes Ola Electric's IPO really special. But like Tesla, can it make money for you? Well, this is what we will try to evaluate in this video. Ola Electric Mobility's IPO has opened. It will close on the 6th of August. So, you have only a couple of days to decide whether you want to apply for the shares of this EV maker. But don't worry, this video will provide you with all the details of the IPO so that you can decide whether you should invest in it, so do watch it carefully. But before I start, something important. Successful IPO investing requires not just analysis, but also knowing some secret IPO hacks. We discussed them in an earlier video. So after you watch this video, do watch that one as well. Now I've divided this video and the analysis into certain parts. Let's begin with the first part, which is understanding Ola Electric's business. Ola Electric Mobility manufactures electric two-wheelers and core EV components such as battery packs, motors, and vehicle frames. Its EV two-wheeler range comprises 3 models: S1 Pro, S1 Air, and S1 X. Plus, it has launched 4 electric motorcycles named Adventure, Cruiser, Roadster, and Diamond Head. It plans to start the delivery of its motorcycles in the first half of FY26. Now, the company has an EV manufacturing and a cell manufacturing factory in Tamil Nadu. Ola Electric has a direct-to-consumer distribution network comprising 870 experience centers and 431 service centers. The company also sells through its website. Next, let's look at the industry outlook. Now, it's no news that electric vehicles are the future of mobility as they are more environment friendly than traditional vehicles powered by the internal combustion engine or ICE. Apart from this, a number of factors are driving the growth in EVs. These include advancement in cell technology, which is making EVs comparable to or even better than ICE vehicles in terms of speed, range, and energy efficiency. A lower cost of ownership of EVs as compared to ICE vehicles. Electric two vehicles in particular have about 55% less total cost of ownership as compared to ICE vehicles. Government initiatives like performance-linked incentives, the FAME scheme, state-based subsidies, charging infrastructure co-development, etc. Thanks to these factors, the registration for electric two-wheelers in India as percentage of the overall two-wheeler registration has gone up from just about 0.5% in 2022 to 6.8% in 2024. So all in all, the EV revolution does have sufficient tailwinds that can propel it for the years to come. Now within the EV segments, electric two-wheelers already seem to be on a steep growth trajectory. That's good for Ola Electric. Alright, let's now talk about the financials of Ola Electric. Let's take a look at some of the key financials of Ola Electric. The first 2 numbers, that is total equity and total liabilities, are from the Ola Electric's balance sheet. The company's liabilities have gone up over the last 3 years. Now, if we divide the total liabilities by total equity, we get the classic debt to equity ratio of the company. In the case of Ola Electric, it has gone up from 0.47 in 2022 to 2.83 in 2024. That's quite a high number. As a general rule, a debt to equity ratio of more than 2 should worry you. Now next come revenue from operations. Now this number is derived from the company's P&L statement. This number has shown a stellar growth over the last 3 years. From about 373 crore, the revenues has skyrocketed to over 5,000 crore. Now that's a mind-boggling growth rate of 136% per annum over the last 3 years. Now next comes EBITDA or operating profit. Now EBITDA stands for earnings before interest, taxation, depreciation and amortization. Now this number has been negative for the company, which means that the company is spending more than what it is earning. The company is loss making at the net level too, and the losses have more than doubled over the last 3 years. Now the company's cash flows have been negative too. Cash flows from operations are part of a company's cash flow statement. Overall, financially, Ola Electric seems to be in bad shape as of now, except for its revenue growth. Alright, let's now see the Ola Electric's evaluation. Because Ola Electric is loss making at the operating and net levels, traditional valuation metrics like the price to earnings growth or the PEG ratio can't be used for the company. In a way, Ola Electric is more of a turnaround play rather than a regular company. So one has to go beyond just the valuation metrics. Further, it's a direct play on the EV story, of which there are no listed alternatives in India. Even in the world, there are no listed electric two-wheeler company, and this gives Ola Electric a unique positioning. Still, if we use the price to sales ratio as the valuation metric, the company is valued at 6.39 times. Now the price to sales ratio is derived by dividing a company's market cap by its 12-month revenue. The lower the number, the better. Now, at its upper price band of 76 rupees per share, Ola Electric will have a market cap of 33,522 crores. Its FY24 revenue, including other income, stands at 5,243 crores. But this number in itself doesn't tell us if Ola Electric is cheap or expensive. We will have to compare this number with a peer. Now the only listed peers of Ola Electric are Tesla and BYD, a Chinese electric car manufacturer. Now mind you, these are two car makers and Ola Electric is a two-wheeler maker. So even here, it may not be an apples to apple comparison, but we will have to live with it. Now Ola Electric is cheaper than Tesla, but both Tesla and Ola Electric are much more expensive than BYD. And don't forget that Tesla and BYD are profit making too. So given that context, Ola Electric's valuation might be steeper. Alright. Let's now move on to some IPO related metrics. But before that, let me request you to subscribe to this channel if you aren't already a subscriber, and do press the bell icon so you never miss a video from us. The key IPO related metrics are on your screen. The total IPO size is 6,146 crore, of which the fresh issue size is 5,500 crore and the offer for sale is for 646 crores. Now in a fresh issue, the money goes to the company, and in an OFS, it goes to the selling shareholders. If an IPO is just OFS, you should be careful as the company is not going to benefit from it. Rather, its existing shareholders are selling their stake. But that's not a problem with Ola Electric, as 89% of the IPO is a fresh issue. If some existing shareholders are selling their stake for monetary reasons, that shouldn't be a problem. Now the IPO closes on 6th August, and that's something we discussed at the start of the video. The IPO price band is 72 to 76 rupees. So you can place your bid at these prices. However, to increase your chances of an allocation, you should apply for an IPO at the cutoff price. Now for a retail investor and at the upper price band of 76, one lot of Ola Electric's IPO will cost you 14,820. Now the company currently has about 369 crore shares outstanding. Post the IPO, the number will rise to about 441 crores. So that's a change of about 72 crore shares. Now do note that an OFS issue doesn't impact the share count as the existing shareholders are selling their stake. It's only the fresh issue that impacts the share count. Now the promoter shareholding currently stands at 45%. It'll come down to 37% post IPO. Now Bhavish Agarwal, founder and CEO of Ola Electric, currently has 36.94% stake in the company. Post IPO, this stake will drop to about 30%. But Agarwal is not taking part in the IPO sale himself. However, Ankush Agarwal, Bhavish's brother, is the beneficiary of the stake sale by promoter group entity Indus Trust. Let's now try to evaluate this IPO through some critical IPO related criteria. We discussed this in our video on how to analyze IPOs, so do watch that video for more details. The first is the share of the fresh issue versus OFS. As we discussed a little while ago, this IPO issue is 90% fresh, so that's good. The second is the use of its IPO proceeds. As stated in the RHP or red herring prospectus, the company plans to use the IPO proceeds for a capital expenditure, repayment of debt, investment in R&D, organic growth opportunities, and general corporate purposes. If it was just repayment of debt, it might have been a red flag. But here, IPO proceeds are going to be used for growth as well. So that's fine. The third factor is if the company has issued shares in the recent past at a lower price than the IPO price. Now, over the last 1 year, the selling shareholders of this issue acquired shares at a price ranging from 8 to 113 rupees. The IPO price of 72 to 76 is in this range, but it appears to be quite a premium from the lower price. Now the next criteria is litigations against the company and promoters. Here, the company has quite a clean track record except for 5 criminal proceedings going against the directors with an aggregate amount of about 3 crores. Also, the company has no contingent liabilities. A contingent liability is a possible obligation that may or may not occur depending on a future event. So zero contingent liabilities is a good thing. Next, let's see some of the risk factors mentioned by the company. Now, in its RHP, the company has mentioned 104 risk factors. Now, many of them are like disclaimers and meant for reporting requirements, but a few stand out. Here, I'm quoting them. But do note that the factors that I'm stating here are not exhaustive, and I would encourage you to read them fully in the company's RHP. The first is losses and negative operating cash flows, about which we talked a little earlier. The company acknowledges them as a risk to its business. The second is the company's limited operating history in manufacturing EVs. Ola Electric was incorporated in 2017, so it is not even a decade-old company. China is a key supplier of the company, contributing to 37% of total cost of materials consumed in FY24. That's up from just 8% in FY22. So political or economic tensions between India and China can have a direct impact on the company. Further, the company notes that the withdrawal of the government incentives for EVs can result in an increase in the price of its two-wheelers, and that can impact demand. A major risk is that the company is yet to complete a full warranty cycle of its EVs. Its warranty reserves may be insufficient to cover future warranty claims. The company's two-wheeler factory had a capacity utilization of just 49% in FY24. So more than half of its capacity is still not in use. Now that can be good as the company can take on higher production instantly, but it can be bad as it hurts economies of scale. The limited number of its charging stations is also a risk quoted by the company. So this was some of the important IPO related information. Given all this, should you invest in Ola Electric IPO or no? Let's see. Should you apply for Ola Electric's IPO? Alternatively, should you invest in the stock after listing? Now, a unique proposition, an emerging industry, rapid revenue growth, all these are positives for Ola Electric. The urgency the world over to arrest climate change also gives the company's offerings a natural edge. But let's not forget that Ola Electric isn't the only company in this space. True, it will be the only listed company, but that doesn't mean it doesn't have competition. Now, there are many unlisted peers to this company, such as Okinawa, Hero Electric, Ampere, and Ather. Not to forget that mainstream auto companies have ambitions in the EV space too. Added to this is Ola Electric's weak financial position as of now. So, if there's an opportunity, there is a risk too. And do go through the company's RHP before investing in the IPO. The RHP is the ultimate source for the details of any IPO company, and hence it's indispensable for an IPO investor. And with this, we have come to the end of this video. I hope you found this video useful, and if you did, please don't forget to share with your friends and family. I'll be back soon with another video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.